Welcome back, everybody. So today I get to talk about something a little controversial, or maybe a lot controversial, depending on what industry you're in. And it's called the Assignment of Income Doctrine in the Internal Revenue Code. And essentially what it says is that you cannot take income or property that is reported in your Social Security number and reassign it to another entity or individual. So that sounds really confusing, right? But here's what it boils down to. There are some industries out there, for example, I see this a lot in the real estate and financial industries, where they receive commissions, and for whatever regulatory reason, those commissions can only be reported in their Social Security number. So these are people who, at the advice of professionals or other people in their industry who are also doing the same thing, form an S corporation or an LLC and take the S election, and then 1099 the entity for all of their commissions. So they basically have a Schedule C that reports the income and then an expense that takes it all away. So they have a zero profit return on their Schedule C. And then the S corporation or S election then reports that income on their tax return. They take advantage of all of the expenses, and then they have a net profit that is no longer susceptible to self-employment tax, which sounds like a really smart thing to do. The problem is the Assignment of Income Doctrine says you cannot do that. Now, that's not to say you can't 1099 your company for something that is reasonable. You just can't do it for all of your commission. And there are some certain industries, that it's just not possible to do. For example, the financial industry is really difficult to do that in. Now, I know a lot of you are really upset with me right now saying, well, wait a second, I do that. Everybody I know does that. That can't be right. Unfortunately, I would point you to a case that came out in 2016 called Fleischer versus Commissioner. And this was a guy in the insurance industry who, at the advice of his CPA, and I will address that issue later, did exactly that. He made sure to 1099 his S corporation for all of his commissions. Then he took the reasonable business operating expenses, and then he had a net profit and he paid taxes on that. Now, other than the fact that the Assignment of Income Doctrine does not allow for that, he did a few other things that were incorrect as well at the advice of his CPA that probably made this worse. But basically what happened is the IRS says, nope, you can't do that. So they redid all of his tax returns and then hit him with back taxes, penalties, and interest. So if this is something you are being recommended to do by either your tax professional or other people in your industry, you might want to Google the Assignment of Income Doctrine and then the Fleischer versus Commissioner case. Now, in the Fleischer versus Commissioner case, it was very specific to the insurance industry, but it's one of those things where there are a lot of cases over several industries that you might be able to dig up that will show you how this has gone wrong time and time again. In this guy's case, again, I think that if he had done things a little bit more in compliance, things would have been great, but he was doing what his CPA told him to do. Now, ultimately, if he were to continue doing that, he might get hit with a felony called tax evasion. Now, in this case, he did not get charged with tax evasion. He took a professional's advice. He didn't understand the law, but he was still responsible to pay those back taxes. Okay. However, if he were to try it again, he'd be in a lot of trouble. So this is one of those things where the IRS is often very accommodating when they realize that you are taking a professional's advice or you don't understand the law. But now that you know, they would consider it tax evasion potentially after this point. Now, I want to address this thing where the CPA actually recommended that he did this. And unfortunately, there are a lot of CPAs out there that will recommend this because they believe the benefit outweighs the risk. I don't happen to be one of those people. I think that we should be setting you guys up to make sure that you would pass an audit. I always assume that my clients are going to get audited. I never talk about the risk of that happening. So that's one of those things where if you are recommended to do this, please bring this up, ask the questions. I know a lot of CPAs who are just like me and very much avoid this situation altogether. And as a matter of fact, I won't even do the taxes of somebody who has decided that they are going to move forward with this strategy because I just don't want to be part of that. So be careful. ask the questions. Assignment of income doctrine. Feel free to look it up on Google. You can find a lot of stuff there. Okay, you guys, next week, I'm going to be talking about the home office deduction. Again, this is another area that's confusing and things changed a little bit in 2018 to make it just a little bit more difficult for those of you who have S corporations. So we're going to be enjoying that conversation. We'll talk to you all soon. If you all have questions, you know how to contact me. My contact information is always at the end of this video, and I would love it if you wouldn't mind following me on Facebook and YouTube. We'll talk to you next week. Take care.